Hey, hey, hey. Happy Tuesday. We're back. It's Tuesday before the Wednesday. The BLS inflation day, or the announcement comes out at what, 8:30 Eastern time, tomorrow, Wednesday, the 12th of March. And so here we are, 11th of March, and Oliver's already been prognosticating and back and forth and trying to interpret the different new methodologies that have been defined by the BLS after the January announcement. And we're looking at February inflation. We've seen Truflation drop down to 1.3% or maybe 1.4 now. So a significant dip in since March 1. And generally Truflation has a 45-day lead time. And so I think what we will see is a catching up of that, but not fully recognition of that yet in the BLS numbers. And I'll let Oliver do more of the explaining. He's been busy talking to a lot of the Truflation customers and users around what is going on in the market. So thanks, Oliver, for taking time out and sharing your truth with the truthers.
Yeah, great to be here, and thanks for having me on again. Look, I think there's been a massive shift in the weighting applications for each of the subcategories. So if you look at the relative importance of food, housing, all the categories that the BLS reports, there's been a shift. And so if you look at the impact of that shift, it certainly has helped some more increased dependencies on the more volatile categories, such as food and energy. And of course, those are the two categories where we have started to see a lot more upward shift in pricing in January and February. And those numbers are driven partly because of commodities like eggs with the bird flu and supply chain disruptions. But there are also other categories across the board that are seeing significant increases within those categories. And then, of course, electricity, the higher usage in the cold winter blast that has extended and is expected to extend all the way until early mid-March, which is about now. So, so that all that is impacting the inflation. But as Truflation reports it, we have seen a downward trajectory of the numbers, and we're about to, waiting for the reversal, and we've got some predictions. So if you're interested in that, please do subscribe to the channel and also subscribe to Truflation to understand what exactly is happening for the longer term outlook. But for the immediate outlook for the month of February, Truflation is expecting the BLS CPI number to come in at 2.8%.
So the low end of the prediction, right? So the market is sort of 2.8 to 3%. That's sort of the range. We're currently at 3%. So that's a 0.2% drop that we're going to see, that we're anticipating the BLS announce.
Yeah, correct. And the market, there are some outliers in there that goes as high as 3.2. There's some outliers that go as low as 2.5. But if you take out the outliers, you got a range of 2.8 to 3. I think the major driver in this, as I said, is going to be more the core categories, because the consumers are tightening their wallets and are concerned about tariff concerns. So they're being more economical and price sensitive in their shopping. And I think also, as mentioned earlier, the volatile categories of utilities and food are where we've seen significant increases. But I think the longer term view, if we go beyond February and look into March, there is a lot of risk to the upside. And we're starting to see inflation. Truflation has reported the last 2 days of some upward trajectory of inflation. And there is a lot of risk to that upside. I think for the longer term outlook, be it because of immigration, be it because of federal spending cuts, tariffs, tax reductions, and whatsoever, right? A lot of other factors that are causing a lot of risk to the upside rather than to the downside.
Yeah. So I think my interpretation is largely that we're going to see a bigger drop in the short term and then a pickup in the longer term before we then see a plateauing due to productivity gains as new technology kicks in. But that's going to take a while to kick in, right? So right now, all these cost-cutting measures are driving down consumption. I mean, we're hearing what was it? Even the head of Walmart, I think, was saying that people are really struggling at the end of the month to actually be able to continue to do their shopping. So people are going less and less to the grocery stores and spending a lot less in the markets right now.
Yeah, I think you're right. I mean, I think, you have to look at, we're looking at the US economy as a whole, and we're looking at inflation as a whole aggregate. All right.
Yep.
But I think if you break it down into the demographics, I think, yeah, I think the mid to lower income consumer groups are really finding it tough to meet end to end the monthly expenditure bucket, the costs with the incomes that they're receiving. I think then you have this large percentage of spending from the higher income that are really fueling the expenditures. But I think for the first time in January, as the government, the US Census Bureau has reported, retail sales dipped. And also, according to the BEA, the personal spending dipped for the first time in more than 18 months, 24 months. So it's a pretty significant shift. And I think that comment by Walmart is probably spot on. Not only for the lower end of the segments, but I think for generically across the US, because the prices are increasing and becoming more and more of a factor on people's wallets. And if you look at the consumer confidence that was just released, that Truflation has just released, but also from other sources that's out there, you'll see a significant dip in consumer confidence in January and in February, right? So you have 2 months in a row where consumers are, and February in particular, but I think with 2 months in a row where people are concerned about what the outlook of the economy is. And of course, the biggest concern amongst the consumers' mindset right now is inflation.
Yeah, and people do feel inflation, right? Especially when it comes to the food category, which is some sort of 18% of household spending, or between 16 and 18%. I can't remember the exact number, but if you go to truflation.com and look at the composition, you can see it exactly there. But I think the interesting element is people go to the grocery stores 10 times a month, and so they're witnessing price changes every single day, right? Every time they go, not every day. Sorry. But yeah, so that's quite a significant impact. Whereas rent and shelter is only once a month, right? You pay your bill at the end of the month, or utility bill comes at the end of the month. So it's less of a, you prepare for that shock once a month and you're super depressed in that last week. But generally it's aligned maybe with your salary receipt that you get. And so you can maybe make that meet. But the other stuff you have to sort of nudge your way through to get to the end of that month.
Yeah, and especially if you consider, take into housing just an example, right? Especially when you consider some of the people that took out mortgages before the higher interest rates, before the pre-pandemic situation. Interest rates were super low, and people are stuck on 30-year fixed mortgages, and so they don't their expenditure on their mortgage repayments has been the same regardless of where interest rates have gone up or down. I think that is a considerable factor for a large percentage of the U.S. population, especially given the home sales in the recent months hasn't looked very favorably, and the housing supply market isn't looking too good. So as long as interest rates stay high, the chances of the housing market seeing a boom is going to be tougher. And then you look at even a forward more trajectory. If these tariffs from Trump on Canada come into place, 1/3 of all soft lumber that gets produced as a critical building material for the construction of houses, that will hit a 25% increase in costs. How much of that will be passed on to the consumer? A different question, but it is a significant concern amongst the consumers for the longer term outlook.
Yeah, and so the tariffs, right? So if you go to truflation.com back in the 20th of February, you dissected the whole situation around tariffs and what that really means. And you've done an analogous between back in the 19th century or 20th century, I think it was, or pre-Civil War. We've done 1820, what that looked like, and then ultimately the comparisons to where we are today, how it didn't work in Argentina. So this is pretty good insight. What's your view around the tariffs, really, and thoughts there?
Yeah, so the question for us is when and if the tariffs go into place, because there seems to be a lot of fluctuation here. But for argument's sake, let's assume the 25% tariff on Canada and Mexico and the higher rate of tariffs gets applied onto China. I think you're looking at a short-term blip in the interest rates. In inflation rate, and that is easily amountable to anywhere, but depending on the extent of the tariffs, but assume full-blown tariff implementation, and let alone any retaliatory tariffs. But the initial tariffs, we're looking at an increase of 0.8% on the impact of inflation. So it's a significant bump that we're going to get on inflation as a result of the tariffs, and they're affecting multitude of categories. So you're looking at categories ranging from, I mentioned on the housing categories alone, you're mentioning on lumber, of softwood lumber. I think in the crude oil category, as much as the U.S. is self-sufficient on production of crude oil, the U.S. imports around a considerable amount of imports come from the U.S. from Mexico and from Canada, especially for the thicker oil that is required by the refineries to produce gas, diesel, and jet fuels. You got the auto industry and the auto sector with lots of parts crossing the borders for final assembly. You have more short term, but I think will affect consumers much more, is things like on a daily basis, things like maple syrup. You got avocados. You got the steel tariffs affecting canned goods and carbonated soft drinks. And of course, you got alcohol, right? One of the most popular beer brands is Modelo. Add on top of that things like Corona, tequila, and Canadian whiskey, which have very difficulties in moving their production as a result of the branding and result of the classification of those whiskeys and spirits. It's most likely to see a significant impact. So those are the major categories that we'll see. But overall, the impact of tariffs is going to have a 0.8% increase on inflation.
One thing that we've done with inflation, sort of talking about that, the tariffs, everybody's a bit confused in terms of where we're exactly at with the tariffs. But do they kick in on the April 2nd, or have they already kicked in for certain products for Canada, for China, for Mexico, etc.? Yeah.
So China already has had a 10% uplift on tariffs already imposed, and they are in effect already. The Mexico and Canada tariffs have been put on hold, and they're expected to come into effect on the 2nd of March, 2nd of April, apologies. But that also comes into effect with another 10% increase on China tariffs. So you're going to have on the 2nd of April, if this gets implemented, you will see an automatic jump on those categories and others. But it will be automatic for Mexico 25, for Canada 25, and an incremental 15% on China.
Interesting, which sort of leads me to sort of the other topic. Truflation is on average like a 45-day lead time compared to that of the BLS, right? And so we're now 15 days in since the significant sort of shift in inflation due to the first quarter of this year, let's say, and. Yeah, how do you feel the March numbers are going to look like based on, obviously it's super early, right? We're now halfway into March, and given we're real time versus, with the time lag that the BLS has, how do you feel, for the March numbers? Are we actually going to see a further decline from the 2.8 that we're forecasting right now? Excuse me.
Yeah, so obviously a bit early to tell, but I can say the last couple of days as Truflation has been reporting the inflation numbers, we've seen an uptick. And again, tomorrow we'll see another uptick, and there's more expected to be further upticks coming up ahead. So the question is whether the balance of the first 11 days or 12 days of the month will offset the balance of the remaining 20 days of the month. But so, you're balancing 2/3 of unknown versus 1/3 that's known. The 1/3 that it's known, yes, it would come down further, but we're expecting inflation going beyond the March into April, May, and June, assuming tariffs and all the other policies of the Trump administration start coming into play. We certainly would expect inflationary to see a much more upward trajectory.
Yeah, which is sort of what we anticipated, a real low sort of Q1, right, where we're fixing the Doge is coming in, unemployment rates are rising, government's getting more efficient, government's restraining its spending, is not spending anymore. You're seeing all the NGOs that are tied to the governments not receiving any more funding. So all of that has having an impact on pricing, consumption, and 70% of the U.S. economy is consumption, right? Is the consumer spending. But we do see that sort of pick up again in Q3, Q2 onwards, right? Where we see maybe 3 being the new 2 as more spending actually reaches the market and actually then has its potential impact in the market.
Yeah, correct. And then if you assume what Trump has also been talking about is the removal of tax on tips, you talk about
Yep.
state taxes, that will just spur spending more and spur demand. And
Yep.
so therefore that demand is then going to jack up the prices. If you have tariffs on top of that, you're then going to have, this significant rise in inflation over time. Now, a question, of course, is to what degree and when all these things get implemented. But yes, we had forecasted back in January there'll be a dip in January and February. We expected March to hold relatively stable and then to see the return of upward trajectory coming in Q2 onwards. So we're right on track as what we expected. So hopefully, let's see where it goes. But I think the upward trajectory has a lot to depend outside of our control, which is, of course, the price of goods as a result of the tariffs. I think the other element of inflation, of course, is the price of services. And there, the tight labor market, even with the number of redundancies that are coming out as a result of Doge and of the federal government, but they're still getting paid out for another period of time. You will start to see the wage increases, hopefully, reduce a bit, which will reduce the pressure on the price of services. But yes, the price of services are a significant contribution to the inflation. And with wages currently holding around, whether you look at the ADP numbers, whether you look at the BLS numbers in terms of hourly earnings, or you look at wages, no matter what source of data you're seeing that the wage increases is holding relatively stable.
Yeah, which is an interesting fact. I mean, the other thing is we're seeing oil prices. Trump's now going to Saudi Arabia. I think the OPEC state nations have now agreed to to increase production again. And obviously, drill, baby, drill. We're going to see more production in the US as well. So that obviously will bring, and oil, we've done a big correlation between Truflation and oil, and you can see there's a tight correlation between oil prices and Truflation, right? When oil prices come down, so does Truflation.
Yeah, and that's, the two factors that affect oil effects on the inflation rate. One is the big one, which is obviously the cost of gas at the pump. And, there's a 50% of the reduction of price of oil or increase in the price of oil directly is passed on through the price of gas. So that has a significant contribution. And then, of course, all the other transportation elements of oil, right? Be it in manufacturing for plastics, be it in transportation of goods across the country. So yeah, it has a significant impact. And yes, that analysis we did. And furthermore, we've also looked at the analysis of the bond market with the inflation number from an application standpoint of view. And there's a very strong correlation between those two as well.
Yeah, so I think it's going to be an interesting schedule. We're looking forward to the announcement tomorrow, obviously, and I think everybody's expecting it to come down. And then the week after, we've got interest rates coming, decisions, the FOMC meeting. Do you have any thoughts around that? Do you think we're going to see a drop in interest rates, or is Mr. Powell going to try and keep it high?
Well, I mean, if you want to look at the Fed, where the Fed is going to go, I think you can look at the CME Fed Watch, and I think people are expecting it to hold. To be clear, they're not expecting a drop on this wave. but I don't think there's enough data to suggest based on where power goes, that they're going to have a drop immediately. But I think the market now is starting to expect three drops of 25 basis points each before the end of the year, which is an increase from where we were at the beginning or the start of the
Yeah.
year. But certainly for the March meeting on the 19th, I think the last time I looked at the CME Fed Watch, the market was like 99% or 97% or something really ridiculously high. We're not expecting any rate cuts, and for the interest rates to remain unchanged.
Yeah, it's interesting how it's changed so much, right? In the beginning of the year, nobody expected maybe one change this year, right? And now all of a sudden, 2 months in, we're seeing a huge, sort of change in mindset that we're going to see more drops in interest rates. And I think largely it's due to, remember, the US has to refinance some $7 trillion in 10-year bonds, right? And so financing that at 5% versus at 4% towards the end of this year is going to have a significant impact on the P&L overall, right?
Yeah, definitely.
Yeah.
For refinancing that debt is going to be a big factor. And, the assumptions that we made was that, maybe Trump was looking for faster economic growth, which would then help to reduce the percentage of debt to GDP ratio. But, also with Doge also cutting costs, you're starting to see the impact of that. And so who knows where this goes going forward. But there is a lot of, should we say, noise in the marketplace, both positive and negative at the moment. And it's just trying to read between the lines of where the Fed's going to go as a result of that.
Yeah, I mean, thank you. Where can people follow and find out more about your reports and the updates? When will it be released so that everybody can sort of go and read it? Will it come out before the announcement?
Yeah, so please go track us on Truflation.com. You can also follow us on Twitter. And please do also subscribe to our YouTube channels. You'll find a lot of information there. The reports are all available online to all our subscribers through our website, and people can gain access to that. So if you're interested in that, please become a subscriber. And if you have any questions regarding the data, please reach out to us via the Truflation website or through our Twitter or Telegram handles.
Yeah, thank you very much, Oliver. And look, let's see what the market tells us tomorrow, 8:30 a.m. Eastern time on Wednesday. Maybe we'll do a bit of a live cast or something like that to see what it comes out at and do something interesting. So stay tuned, follow, link, subscribe, stay tuned. Lots happening. All the channels. Go to the official channels so you get the real news and the real insight. So thank you very much, Oliver. And see you later.
Thanks a lot, everybody.
Bye-bye.